Good morning, everyone. Hope your weekend is going well. Coco decided to join today to talk about Archer, BigBear.ai, and IonQ. So I want to cover a few different stocks today. Bye, Coco. So I'm going to go over the financials for Archer, BigBear.ai, and IonQ. We're going to look at some recent news from each of the companies, and I'm going to give some analysis and prediction. Okay, guys, one more thing. So I wanted to make it easier, since I post a variety of different content, for you to be able to find content that you are specifically interested in. So I spent some time adding some playlists to the channel, because I do post a variety of content. Sometimes it's more on the thought-provoking analytical side. Sometimes it's very technical price analysis and stock charts. And I know that not everyone is interested in all of those things. So there is a playlist here that you can take a look at. In fact, there's quite a few playlists. So there's the new to quantum playlist. And these are all the videos that I think, if you're new to this topic, I would recommend watching. I have a news and noteworthy. So this includes things like DARPA and when Qubit stock was halted, when Trump called quantum critical, our historic rally in the stock market, etc. Navigating a volatile market. I think this playlist is probably going to be getting lots of love in 2025 and beyond. Thought-provoking. So I have a number of videos that I think aim to be more conversational and focus on different topics like artificial intelligence, ethics, quantum, pseudo-random versus quantum-random, that type of thing. So if you're interested in that type of content, check out the thought-provoking. The bull case. So if you're more interested in investing and making money from quantum, I'm going to try to add some videos to this playlist as well. What sort of indicators do we have that these stocks are going to go up in when we're investing? And there's no guarantee of that, of course. And then cybersecurity and safety. I've created a lot of content around this. Take a look at that one if you're interested in that topic. And price analysis. So I do a lot of different price analysis videos. So when I upload these videos, it's very easy for me to just add those to the playlist. So definitely bookmark that if you're interested in a specific playlist. Okay, so that's everything for the playlist. Let's jump into Archer, BigBear, and IonQ. Okay, guys, what is Archer? You're probably wondering. If you don't already know, let's take a quick look at what the company is. This is basically, to me, they're taking the concept of a drone. You know, those drones we've been seeing get better and better and cheaper, and they're making it a passenger aircraft, essentially. Now, that is a gross oversimplification of what Archer is doing, but they're basically creating electric air taxis. So this is an example they use a lot, this downtown Manhattan to Newark airport. They cut it from 62 minutes by bus, 52 minutes by car, to 9 minutes with their short flights. So one of the things that they're specializing in is the shorter duration flights. And all electric tilt propeller technology. My understanding is they have lots of interest in investment. They have partnerships with Palantir, United, even the UAE, and different companies are looking at Archer as they build out their products line. So it's a very exciting, the next progression of flight, especially shorter flights from covering shorter distances. So Archer is very interesting to me. We saw this tweet from Secretary Duffy. The technology that we are using is old. That's why it's causing outages and delays that we are seeing at Newark. If we don't act, we will start to see these issues across the national airspace. That's why I'm announcing a plan next week to build an all-new traffic control system. So a lot of government systems can become outdated And it's important to bring those up to date. The technology has improved, so the old systems that we've relied on may be out of date. So Archer could certainly benefit from an updated air traffic control system. And let's take a look. This is the most bullish sign I've seen. All of the stars align to Archer being at the forefront of AAM, manufactured and created in America, partnerships with Anduril and Palantir, the Sean Duffy relationship. This is a pretty bullish. This could be big. Any details on who will own the product system Archer and Palantir are building? So that's a connection as well. I'm not an expert at Archer, but I'm an investor in Archer, and I'm very interested in the company, and I think they have a really bright future ahead. So let's look at some recent news for Archer and then look at the chart. So Archer secures design approval for UAE's first hybrid heliport, paving the way for commercial air taxi service in Abu Dhabi. And this was on April 23rd, so about 11 days ago. This is what I love about the stock market and all these businesses. Stuff is always happening, and it's just fun to follow all of it, and it's exciting. Let's take a look at another piece of news. So Archer unveils vision for New York air taxi network, including routes between Manhattan and nearby airports in partnership with United Airlines. So this was a pretty big one, and this was just a couple of weeks ago. Obviously, United Airlines has been around for a long time. It's an established name in the airline business. So Archer is making some significant headway with their partnerships already. Let's look at the Archer Palantir partnership. Okay, so this was from March, so about a month and a half ago. Archer and Palantir to build the AI foundation for the future of next-gen aviation technologies. Archer will initially leverage Palantir's Foundry and AIP to accelerate the scaling of its aircraft manufacturing capabilities. They plan to work together in parallel to develop software for the next gen of critical aviation systems, and Archer and Palantir will formalize the partnership later today during a signing ceremony between Palantir co-founder and CEO Alex Karp and Archer founder and CEO Adam Goldstein. Very cool. All right, so Archer, we know from this is an early company, so they're not going to be posting huge profits. They are in R&D and building out. So we can see that income is down, free cash flow is down, net income is down, operating cash flow is down. And they're spending a lot on their CapEx and costs. Now, they are doing this without creating a whole bunch of debt, which is a good sign. EPS looks like it was worse in 2023. It got a little bit better in 2024. So we would hope to continue to see improvement there. Let's take a look at the stock chart of Archer, because Archer has been in the news and it's caught investor attention for quite a while. Back in November, October, Reddit decided to choose this stock as a stock to pump. And then there was a very sharp sell-off. And what was interesting about it is it really kind of held this $8, above this $8 level for quite a while. So this was so Archer was sold off after its initial climb to almost $12. It dropped down to an $8 price level, and then it recovered into February. And then in this macro, it really has been pushed down considerably with a bunch of other stocks. We've seen this across the market. Almost every stock in early April was really pushed down. So that was a potential entry point. And we've seen since late April, we've seen a really big move out of Archer. We've seen a 75% move, which is crazy to say. But Archer does seem to like this $8 to $9 position. What levels would we be watching for Archer? I would say that this $10 level will be critical for it to break and for it to get up into the highs, its all-time highs. Let's look at its all-time highs. So if we go back to IPO, at one point it was a $20 stock. So it wants to be at this $9 level. We do have earnings coming up. So what are we expecting from earnings? That is scheduled for May 12th, and they're expecting a negative 0.22 EPS. Now, the EPS numbers we were just looking at, that looks like it's going to be a miss. And with a lot of these early companies, you're kind of investing in what could be in the future, not what will be next quarter. Okay, let's shift gears into BBAI. So we know that BigBear, in their most recent report, essentially they missed on expectations. So if we look at their earnings, so let's take a look at this chart. So we can see that BigBear since 2020 has just been kind of rolling in about the same amount of cash. It's been pretty flat, actually. We can see that net income has spiked down to the downside last year, and it looks like they are in a period of potential improvement on the net income side. Operating cash flow looks to be improving. Cost in CapEx looks like it's kept under control. One thing that was really big was they reduced debt in this last call, and I think a lot of investors potentially missed that. Let's see if I have a okay. So during the first quarter of 2025, they reduced their long-term debt by $58 million as a result of voluntary conversions of the 2029 notes. Their cash balance also is $107.6 million as of March 31st, 2025. And we know that BigBear has connections to this current administration. They have a new CEO. They have very interesting technologies that we can see in airports already, like Heathrow. They scan your face. So kind of like a big brother technology, a higher form of decision intelligence, national security, digital identity, supply chain management, government and defense, travel and transportation, manufacturing. Recently in the news, let's take a look at a couple quick articles. So they technically missed what Wall Street wanted, but the stock didn't necessarily dump after this earnings, which is a really good sign for BigBear. As someone who's held BigBear for now over half a year, what I'm seeing out of BigBear is pretty optimistic. So April 24th, just 10 days ago, BigBear AI is to power Austal USA's next-gen submarine construction using AI and digital twins. So we saw that one. We saw that BigBear in December of 2024 is awarded this big Oasis Plus IDIQ contract for federal, civilian, and defense agencies. So let's look at BigBear price. So if we look back at the last 6 months, my entry into this trade was somewhere around here. And it was pretty fun to watch it go all the way up to over $10. Why did BigBear go up over $10? Because there's ties to Palantir. There's the new CEO. There's the potential that, Palantir's already $120 a share. What's the next Palantir? What's the next AI software play? And is this theme of AI and software changing in the near future? So the stock ran up, and then in a very challenging macro, it sold off. It sold off with velocity. And then earnings, the previous earnings, did not please investors. So it sold off even more. It gapped down. And now what's interesting is we're kind of in this period with Big Bear where all the people have wanted to sell have pretty much sold. And those that bought around here and here are okay with what's happened. And they're looking at more like, what was interesting is after earnings, it actually didn't sell off with the velocity that some thought. Actually, quite a bit of volume. You can see it in the candles down here. Quite a bit of volume came in after the earnings miss. And you can see I've marked a play that I have here. So I just have a short-term call, some contracts at the 350 strike. Because I think if Big Bear is going to move, it's either going to move in a directionally bullish way, which this would be a possible move, or it's going to move in a bearish way, depending on macro. I think macro is going to have a big effect on this. But Big Bear actually held up quite nicely after these earnings. And to me, that's a bullish signal all by itself, because if we look back at 3 months ago, we can see after earnings, it gapped down and we were in the high twos, and we're holding this almost mid threes. And we're in a zone, I would say, where we have a lot of places we can bonk our head here on the way up. But another contract, let's see, I've actually written this out before, what Big Bear needs. So they need new deals. They need a good earnings. So maybe in the next quarter, their earnings will improve. Trade deal or Fed rate cut could really help Big Bear along with the rest of the market. Big Bear is in a situation where they've reduced debt, and it looks like investors have more confidence. I mean, if you're just looking at the fact that it held its position after earnings and they missed on earnings, that's a pretty bullish signal. Okay, now we're going to take a look at IonQ, who had a big announcement on May 2nd. So about 2 days ago, they announced quantum enhanced applications advancing AI. IonQ has demonstrated 2 new hybrid quantum classical methods that enhance large language models and generate synthetic materials data, signaling progress in practical AI applications. IonQ integrated quantum circuits into a large language model, achieving higher classification accuracy and projected energy savings. So this is really big. And this is a theme that I think we're all going to be seeing more and more, is how quantum can make these AI data centers more energy efficient. In a second project, IonQ used quantum enhanced GANs to create synthetic steel microstructure images, outperforming classical models in image quality and supporting data industrial AI workflows. So really exciting news from IonQ, and they've recently been on a little bit of a tear. They had their $22 million deal with Chattanooga as the first quantum computing and networking hub in the US. On April 23rd, IonQ signed a historic agreement with Toyota Corporation to advance quantum computing opportunities in Japan. And we see this recent one was the demonstrated quantum enhanced applications advancing AI. So how has IonQ been doing lately from a stock perspective? Well, it's a really interesting one, and I've marked some levels before, and it really has signaled quite a bullish reversal. Just to recap the history of this stock, we saw almost a $54, $55 price point at one point. And then we plummeted all the way to 26 during the quantum crash. So quantum frenzy, we climb; quantum crash, we fall off a cliff. But IonQ was able to recover pretty nicely. They were rejected off 44 a number of times. Looks like at least 6, 7, 8 times were rejected off of 44. And then in a challenging macro and just a variety of other factors. I mean, we're talking January all the way through April. The market was just not is very fun, especially for speculative tech plays or new emerging tech players like IonQ. So what ended up happening is IonQ was one of the only quantum stocks to get rejected off of its quantum crash level. So it actually rejected, let's see, we'll count it. 1, 2, 3, 4, 5, 6, 7, 8, 9 times, 8 times it rejected off this 26 level. And then recently in the last 5 days, it blasted through this 26 level. So we cut through, we actually gap up over, and we're moving into new levels, and we're moving on volume as well. So take a look at the volume in the last trading day. And we have earnings coming up as well. So there's a lot of catalysts currently for IonQ. I think a lot of traders and investors are looking at IonQ. The potential upside to that 44 rejection is 42% from close. So if we wanted to map out some scenarios, let's go through a quick bull case. So a bull case is we would come up, we'd go down, and do something like this up to earnings. IonQ reports earnings on May 7th. So that's coming up quite quickly. So this trading week will be potentially directionally bullish. Now in a bear case, we are at a critical $30 level. I don't just draw lines on charts for fun because I have nothing else to do. Usually there's been rejections in the past. So let's see this $30 level. We see multiple areas where the stock is consolidated. It rejected specifically here off this level. So in a bear case or in changing macro, we could see something like this. And IonQ did miss earnings last go around. So IonQ's financials were not the best. Let's take a look. So in December 2024, they reported revenue up almost 91%. Their income was down, diluted EPS was down, and net profit margin was down. They did have a good bump in cash. They did miss on revenue by 185%. So this is one of the reasons that the stock went down. Now the CEO of IonQ is very bullish on the company, says they're the next NVIDIA. We need to start seeing it in the numbers. So what are you guys' thoughts? What are you guys' thoughts on Archer, BigBear, or IonQ? Do you see any of these stocks making any significant ground in 2025? What are your favorites? Do you not like any of these stocks for a particular reason? And let me know in the comments. And if you made it this far, if you haven't already, please consider leaving a like or a subscribe if I've earned it. Hope you have a great day.